trying to blend my makeup. I'm gonna be honest, I've been recording this for 30 minutes and I cannot figure out how to make an intro. And all I really want to say is that I'm really glad you sat down and studied today. I mean, that's a really good thing and you should be proud of yourself. Like, round of applause if I can figure out how to do that in editing. Anyways, let's get on to the actual reason you're here. As accountants, we keep records of transactions. You know that thing when you exchange one thing for something else? Yeah. We track when something comes into a company and when something goes out of a company. And to do this, we use a system called dual entry accounting. This means for every transaction, we have at least one debit and at least one credit. My cat's crawling out of my lap. It should look something like this. You've probably heard those terms before, but you may not know what they mean or how to use them. And that's what we're going to get into today. The first thing you need to know is that debits aren't inherently good and credits aren't inherently bad. Instead, they represent what we call a flow of economic benefit. Economic benefits are defined as benefits that can be quantified by money generated. Think of it like this. When you fill a cup of water, you pour water from a source, like this pitcher, into a destination, a cup. The outside source is the credit and the destination is the debit. The water in this case would be your economic benefit. In a company, economic benefit will flow towards things such as assets, expenses, and dividends. We source that economic benefit from things like equity, liabilities, and revenue. It can get kind of confusing because we list debits on the left and credits on the right, but just remember that your credit is going to be your source and your debit is your destination. You just have to get used to reading backwards. Let's look at an example. Let's say I sold a textbook to my friend Michael for $100, and he told me he would pay me next week. Even though I haven't received that $100 yet, it's still an economic benefit because of the revenue recognition principle that we talked about in the last video. In this case, I would debit accounts receivable because the $100 flowed into that account, and I would credit sales revenue because the $100 was sourced from selling my textbook. So, sales revenue is the source, accounts receivable is the destination. Remember, when journalizing transactions, we always list the debits first and the credits last. Let's turn this around. Say instead of selling my textbook to Michael, he sold a textbook to me. In this case, the economic benefit is still that $100, but the source and the destination have changed. The destination of the economic benefit would now be with Michael, so I debit my expense account to show that I purchased something from him. The source is a little bit trickier. Ask yourself, where did I get the $100 from? I could credit my cash account to show the outflow of economic benefit, or if I was like Michael and didn't want to pay up front, I would create a liability account called accounts payable and credit it to show that I sourced the economic benefit from an account I hadn't paid yet. It's okay if you don't get this on the first try. It can be really difficult to remember when to debit or credit a certain account. So here's a trick to make it a bit easier. Every account will have a normal balance, which refers to whether the account increases on the debit or credit side. To know an account's normal balance, write this down on your paper. DC ADELER, or DC Adler. DC stands for debit and credit. On the debit side, ADE refers to assets, draw, and expenses, which all increase on the debit side. On the credit side, LER refers to liabilities paid in equity and revenues. And you guessed it, they all increase on the credit side. When you journalize a transaction, look at the accounts affected and ask yourself, what is the normal balance of this account? And did it increase or did it decrease? To summarize, economic benefit refers to any quantifiable benefit from generating money. We use debits and credits to track the inflow of economic benefit from one source to another, and you can use DC Adler to remember an account's normal balance. That's all for this video, finally. Oh my gosh, I hope you understand debits and credits now. As always, if you have any questions, leave them in the comments down below. Thank you for watching, and I'll see y'all in the next one.